What you need to say is higher than $202.90 per month right now. You are paying what is called an IRMAA surcharge, an additional charge that SSA adds to your premium when your income from 2 years ago exceeded a certain threshold. And here is what most people paying that surcharge do not know. There is a federal form that can reduce it or eliminate it entirely, and the Social Security Administration is not required to tell you it exists. The form is called SSA-44. It has one specific purpose: to let you tell SSA that your income has dropped since that old tax return they used, and to ask them to recalculate your premium based on what you actually earn today. Filing a single form can eliminate those surcharges in a matter of weeks. The approval rate for legitimate life-changing events is high, and yet most people paying hundreds of dollars extra every month have never heard of it.
This video will walk you through exactly what IRMAA is, how to know whether you qualify to appeal, and the 3 specific steps to complete and submit Form SSA-44, so your Medicare premium reflects what you earn today, not what you earned 2 years ago. Subscribe to Nami Finance USA and turn on the bell notification. When Medicare billing rules change and your check is affected, you will hear about it here. Let's start with how IRMAA works, because understanding the mechanics is what makes the appeal possible. About 5.1 million Medicare beneficiaries paid Part B IRMAA surcharges in 2025, roughly 7 to 8% of all Medicare enrollees. Most of them are paying it because of a rule built into the Medicare system that almost nobody explains at enrollment.
Every year, the Social Security Administration goes to the IRS and pulls your tax return from 2 years ago. That is the income number they use to set your Medicare premium for the current year. For 2026, that means SSA is using your 2024 tax return to determine whether you pay a surcharge and how much it is. This is called the 2-year look-back rule. Here is exactly what those surcharges look like in 2026. The standard Part B premium is $202.90 per month. If your 2024 income exceeded $109,000 as a single filer or $218,000 as a married couple filing jointly, you are paying a higher premium, ranging from $284.10 to $689.90 per month, depending on your income tier. At Tier 1, income between $109,101 and $137,000 as a single filer, the surcharge adds $81.20 per month to your Part B premium, plus $14.50 per month on your Part D plan. That is $1,148.40 per year in additional premiums. At Tier 2, the combined annual surcharge reaches $2,884.80 per person. At Tier 3, $4,620. At Tier 4, $6,246. And at Tier 5, for income above $500,000 as a single filer, the combined Part B and Part D surcharge reaches $6,936 per year, per person. It only takes $1 of income above the threshold to trigger the full surcharge for that tier. That means if your 2024 Magi was $109,001, $1 over the line, you are paying an additional $1,148.40 this year, not because of what you earn today, because of $1 you earned 2 years ago. The 2-year look-back is where the real injustice happens, and it is the reason the SSA-44 appeal exists. Imagine you worked through 2024 and earned $130,000. In early 2025, you retired. Your income dropped to $40,000, Social Security, and a small pension. In January 2026, SSA sent you an IRMAA determination letter. Your Part B premium for 2026 is $284.10 per month, not $202.90. You are paying an extra $81.20 every month based on income you no longer earn from a job you no longer have. That is the situation SSA-44 was created to fix. Now, let's talk about who qualifies for an appeal, because not every income drop makes you eligible, and understanding the rules before you file saves you time. To use Form SSA-44, your income must have dropped because of a specific qualifying event called a life-changing event. The 8 qualifying life-changing events are marriage, divorce or annulment, death of a spouse, work stoppage, work reduction, loss of income-producing property, loss of pension income, and employer settlement payments. Work stoppage and work reduction are by far the most common qualifying events for seniors filing this appeal. The income reduction must also be large enough to move you into a lower IRMAA bracket than the one shown on your 2024 tax return. If your income dropped, but you still end up in the same bracket, an appeal will not help you. That is an important test to run before you invest time in the paperwork. Look at the 2026 IRMAA brackets and ask, if SSA used my current income instead of my 2024 income, would I be in a lower tier, or would I drop out of IRMAA entirely? If the answer is yes, file the appeal. If the answer is no, wait for the 2-year look-back to catch up naturally in the following year. There is one important situation that does not qualify, and it trips up a lot of retirees. If your higher income 2 years ago was due to a one-time event, such as realizing capital gains or taking a large withdrawal from your IRA, and that was a financial decision you made by choice, that does not qualify as a life-changing event. The distinction is this: the event must be something that happened to you, not a financial decision you made. Retiring is a life-changing event. Choosing to convert a large Roth IRA in a single year is not.
Here are the 3 steps to file your appeal. Step 1, gather your documentation before you touch the form. This is where most people get slowed down, and doing it in the right order makes the process far faster. You need 2 categories of documents. First, proof of your life-changing event. For retirement or work stoppage, this means your final pay stub, your employer's confirmation letter of your last day of work, or your retirement award letter. For death of a spouse, the death certificate. For divorce, the final divorce decree. For loss of pension income, the pension termination notice from your former employer or pension administrator. Whatever your qualifying event was, SSA needs official documentation confirming it happened and when.
Second, proof of your current income. This is where the form gives you flexibility that most people do not know about. SSA specifically allows you to use an income estimate on Form SSA-44. Some SSA representatives incorrectly tell callers that you cannot use an estimate, but the form itself explicitly states that you can. If your most recently filed tax return already reflects your lower income, for example, if you retired in 2024 and your 2025 return shows the reduced income, bring that return. If your tax return has not yet been filed or does not yet reflect the full reduction, you can write an estimated current year MAGI and attach supporting documentation such as a Social Security benefit letter, a pension statement, or a bank statement showing your income sources. Your MAGI for IRMAA purposes is your adjusted gross income, line 11 on IRS Form 1040, plus any tax-exempt interest income from line 2A. That is the number you need to estimate or document. Step 2. Complete Form SSA-44. Download the form directly from SSA at ssa.gov/form/ssa44.pdf. The form is 8 pages, but you will only complete 2 to 3 pages of it depending on your situation. The form has 3 steps built into it. In Step 1, you identify your qualifying life-changing event and provide the date it occurred. Be specific. Retired in March 2025 is sufficient, but employment income of $142,000 in 2024 reduced to $0 in 2025 as of March 14, 2025 is far more useful and far more likely to be approved quickly. In Step 2, you provide your current or estimated MAGI, the income SSA should use instead of your 2024 return. You attach your supporting documentation here. In Step 3, you have the option to also request that SSA use an even lower estimated income for the following year, if you expect your income to remain low. This step is optional, but worth completing if your retirement income will stay below the IRMAA threshold in 2027 as well, since it avoids the need to refile next year. One important note: if you are married and both you and your spouse are enrolled in Medicare Part B, each spouse must complete and submit their own separate Form SSA-44. One form does not cover both of you. Step 3. Submit the form and track your case. You have 3 submission options. You can upload the completed form and your supporting documents directly through your My Social Security account at ssa.gov/myaccount. The process is: log in, select Upload Documents, choose SSA form, select SSA-44 from the dropdown, and upload your form and attachments. You can also mail everything to your local Social Security office using certified mail with return receipt, which creates a paper trail proving you filed and when. Or you can bring the form in person to your local SSA field office. Find your nearest office at ssa.gov/locator. IRMAA appeals typically take 30 to 90 days to process. If approved, adjustments may be retroactive, often resulting in refunds for overpaid premiums. Those refunds typically come as a credit to your next Social Security payment or a direct deposit. If your appeal is denied, you are not out of options. You can request a formal reconsideration within 60 days.
If that is also denied, you can request a hearing before an administrative law judge through the Office of Medicare Hearings and Appeals, called OMHA. The process escalates, but the right to appeal at each level is written in federal law.
Navigating your retirement finances can feel like walking through a minefield. You make one smart move, maybe you finally sell a property, complete a Roth conversion, or get a pension payout, and suddenly you're hit with a shockingly high Medicare premium. This is likely due to IRMAA, the income-related surcharge that's based on your tax return from 2 years ago. That big one-time income spike you had is coming back to affect your premiums today. You might worry you're stuck paying this higher rate, especially if it was a voluntary financial decision and not a qualifying life-changing event. But here's the crucial thing to know. IRMAA will automatically recalculate. The surcharge isn't permanent. When Social Security sees your next tax return reflecting your normal income, it will drop on its own. You'll likely pay it for just 1 year. The most important thing is knowing you are not locked into that surcharge forever. About 5.1 million Medicare beneficiaries paid IRMAA surcharges in 2025, and most of them did not know an appeal was possible. If your Medicare Part B premium is above $202.90 this month, and your income dropped because of retirement, job loss, divorce, or death of a spouse, Form SSA-44 was built specifically for your situation. Gather your proof of the life-changing event and your current income documentation. Complete Form SSA-44 available at ssa.gov/forms/ssa44.pdf. Submit it online through ssa.gov/myaccount by certified mail or in person at your local SSA office. Expect a decision within 30 to 90 days and a refund for any months you overpaid. Millions of seniors are paying a Medicare surcharge every month based on income they no longer earn. One form changes that. Now you know it exists. Subscribe to Nami Finance USA so no Medicare billing rule ever takes money from your check without you knowing exactly what to do about it.